Hey everyone, we're going to look at a bunch of MJ names here, some Canadian, some US. There's going to be a bunch that I don't cover because there's a bunch of them, and it takes a whole lot of time to go over them. My favorite comments are the ones that say, what about XYZ ticker? So, go ahead and leave those. CGC on the daily time frame. We got a bull break on CGC, but this was a notable difference where we did not get a bull break on WEED. And some of our members pointed that out very early on, that the difference in the currencies between the US dollar and the Canadian dollar is giving us these charts that aren't really correlated exactly. So 29.30 was the key resistance break for a higher high on CGC, and we broke it convincingly by over 1%. But you look at WEED on the daily time frame, and we did not break that resistance level of 39.84. We came about 1% shy of that resistance and then pulled back. And the price action at the second half of the day and the profit taking that we saw was more in line with the rejection from resistance. We pulled back hard. We broke correlation with SPY to a good degree, and we're much weaker than SPY was. And we got left with a big upper wick rejecting from resistance on WEED and more of a fake out on CGC. If you were only watching CGC, you would say, oh man, what happened to the follow through? What happened to the bulls? But it makes a lot of sense if you look at the other ticker. So the hourly time frame is now setting up for the possibility of an equilibrium, high of the day, low of the pullback. Excuse me. And we're going to look for a lower high compared to 29.69 tomorrow morning and a continued tightening range here. And again, the fact that the market was so strong today and we didn't see that strength hold up as much for CGC is notable. We have the lower cap names, the tier 2, tier 3 names that are not the major players, continuing to see big gains, a lot of them, and some of them really stealing the show at this point. And the bounce is still just nothing very impressive on CGC. The weekly time frame, there's no real bull volume. We're looking for a weekly lower high to be set. And it's very clear that traders and short-term traders and others are jumping on these lower cap names that have more volatility. That's more opportunity. So APHA, we got a bull move at the end of the day. Let's just check in on the last 15 minutes. Or the last half hour. Significant bull spike. This is in anticipation of an offer to come tomorrow, an actual real offer for a potential buyout. So that gave us a strong close on the daily time frame. We broke some resistance here, but again, look at Canada, 869 resistance did not break. 875 and 869 are our resistances, but the US ticker broke its resistance. So we haven't broken to the highest price on the Canadian side, but we have on the US side. We broke 637 and closed above it. That's the highest price we've seen in over a month, and that's not the case on the Canadian side. So there are differences that we need to be paying attention to. And if you want full steam ahead for the bulls, both the Canadian and US side of things needs to be breaking their resistances to be looking for follow through. 637 broke. Next level is 659 and 691 on the US side of things. Let's see the volume. US side, 6 million in the $6 range. Canadian side, we had 5.6 million, but in the $8 range. So still a bit more dollar volume on the Canadian side, but not a break of resistance. So we're watching hourly higher lows for everybody, and the last hourly higher low for APHA, pretty much the low of the day. So we're going to see how much upside we get from here, keeping in mind that we're likely going to see a bit of a sell the news effect with regards to the offer that we're going to potentially see tomorrow, that we're supposedly going to see tomorrow, because again, a lot of volume entered at the end of the day, and a lot of this volume, in my opinion, is going to be selling into any strength that we see on the actual deal coming out. ACB on the daily time frame continues to be the weakest name that I can find in the MJ sector. Obviously, there's some tier 3, very low cap names that are weaker, but just very unimpressive. Even the US side of things is not breaking resistance with any meaningful follow through. We did break it yesterday, or I should say Friday, but again, no follow through there. So still a very unimpressive bounce for ACB, still holding hourly higher lows, but just not getting a whole lot of upside. So on the US side of things, 524 and 514 are hourly supports. 535 ended up being a double top. And on the Canadian side of things, we have lower highs, 717, 713, and our support is 690 and 688, a bit of a double bottom, very clear support at those levels. HEXO is standing out as a shining star for the bulls. Huge follow through and a strong close today. At this point, the bounce that we've seen on HEXO has gone 55+%. Very significant. And again, 55% in 8 days. You are not going to see that on these major names that have tons of volume without major news behind it. So the weekly time frame at this point is starting to break some key resistance levels. And on a pullback, we're going to be looking for a weekly higher low to form. We have tons of space for the bulls to work with, and the odds of a trend change are going to be pretty high. We are breaking a couple resistance levels, but we're not changing the weekly trend until we get the higher low and higher high confirmation of the trend change. Breaking the lower high pattern just increases the odds that that will happen. So we broke 627, and that was a key short-term bull break. Hourly support established a little level at the end of the day at 612. So that's the new hourly support level to keep the bulls in full control. If we break 612 tomorrow, we're going to look for a healthy daily consolidation, and daily higher lows will look to form in the upper $5 range. And you better believe that names like this that have run this significant 40+% are going to see bulls looking to buy the dip on those higher lows. Bulls that missed the initial move and want to get in but don't want to be chasing into very overbought conditions. Also keep in mind for the sector as a whole, the correlation for the S&P 500 has been shifting a little bit, but it's still present. So we know the S&P 500 is expecting a weekly lower high. Again, watch those SPY videos for the up-to-date in terms of what we expect to play out. But just be aware that consolidation is coming. There's no reason to FOMO into these names, fear of missing out, and to buy into overbought conditions. We will consolidate on the daily, and we will consolidate on the weekly time frame, and it will likely coincide with the S&P 500 seeing some consolidation, which is getting fairly due as well. GTII, missed this one in the last video. Everybody let me know about it. So obviously one of the more significantly strong names as well, and holding up really well, where we have a break of resistance. So again, we didn't change the daily trend because we're coming off of the low of the pullback. We broke the lower high at 1480. That's very notable, and that increases the odds significantly that a higher low and then higher high continuation move will occur, but we still need that for the bulls to be in complete control. So again, bulls will be looking to buy the dip here, and this is a US name, but they're going to be looking to buy the dip on a higher low when we do get some consolidation, and that consolidation is coming when we lose the hourly uptrend. Right now, short-term support is 1510. After that, 1356. So again, the names, as we know, the harder you run, the less support you establish on the way up, and the more you're going to pull... Get me today. The more you're going to pull back on the eventual consolidation. The percentage moves that we have in between bases of support that were built here are pretty significant percentages. They're, 5 to 10% before each level down. So as far as lead bulls right now that are still holding up, HEXO is absolutely a lead bull. GTII, Green Thumb, is a lead bull as well. N had a nice strong move. Daily inside bar broke bullish first thing, breaking 118, and then breaking 123 just gave the bulls confidence in continuation. Resistance is 136 and 151 for the next levels to be looking at, and the hourly time frame higher low is 124 to keep the bulls in full control. What stands out to me first thing when I look at this name is look at the volume. Declining volume 2 days in a row. And I look at GTII and it's increasing bull volume on this move up. That's a very notable difference. That shows me more strength. And even HEXO saw another spike in volume today compared to Friday. And that's exactly what the bulls want to see. It's a bit of a short-term red flag telling us the consolidation is coming sooner rather than later when you're seeing declining bull volume on a move to the upside. So USMJ names, GTII being one of them, probably the lead bull right now in the US. KSHB is a lead bull as well. Earnings tomorrow for KSHB. Look at the volume. We could very clearly see that volume was going to be very high. We had half of Friday's total volume in the first, 20 minutes of trading, it almost seemed like. And we had the highest volume in the last 2 months today. So that's preparation for earnings, people loading up heading into earnings. We also broke key 599 double top of resistance and closed over $6. So resistance from here is 608, 670, and then looking up at 693. And this chart on the weekly time frame, again, we're going to be looking to all-time highs when the bulls get going in the USMJ sector on a lot of these names because there's not a ton of resistance. But again, like I said, we're going to need some consolidation and for higher lows to form. If we get a bullish reaction to earnings, we're going to be looking for KSHB to be up in the 670 area. Maybe we get a 10% bullish reaction. If we get a bearish reaction, we're going to look for a higher low to form. I mean, we could pull back 15% and still be, looking for a daily higher low to form. So the bulls are very comfortable with their positioning right now. I would expect some profit taking tomorrow before earnings because of the significant gains we've seen in such a short period of time. But this is one of the names that we're keeping on watch for long term, as it's looking for an uplisting due to the fact that it's not physically touching the plant. And keep a close eye on KSHB in 2019. We'll see how much follow through we get. But like I said, it's just one of these names like everybody else where we need the confirmation of the trend change with a weekly higher low and higher high, just like a lot of these daily charts need the higher low and higher high. MedMen, MMNFF, we have some of these US names that broke resistance but did not see follow through. So 361 was the daily trend change breaking. And as I said in the video over the weekend, these are not resistance breaks that I want to be buying, because I said ideal scenario, we form a lower high and continue to tighten, but we broke resistance and only saw 3 pennies of follow through. And again, that's not surprising at all because we just bounced 40%. Bulls used up their momentum, they used up their energy, and they have to consolidate to catch their breath before trying to see continuation. So we got that bull break, no follow through behind it, and then profit taking. And this is a potential canary in the coal mine. And a canary in the coal mine is, back in the day, a lead indicator. They used to take a canary down in a cage into the mines, and if there were noxious fumes, it would affect the bird before it affected the people. So that would be a lead indicator. So we're watching for the US sector is the fact that MedMen, which is one of the lead bulls in the sector in terms of fundamentals, if it is going to start consolidating now, is that going to give us a little bit of a heads up for other names that are going to be consolidating in the near term as well? So that's something that we're paying attention to, but we clearly lost the hourly uptrend. So as we know, if you lose the hourly uptrend, you zoom out to the daily and look for daily consolidation. Anything above 254 is a higher low, and we need that higher low and higher high to confirm the trend change. CWeb is another one. We broke resistance, but that was straight into profit taking. 1694 was the key level. We got up to 1735. Nice follow through, but again, a big pullback and a significant amount of profit taking. We didn't lose the hourly uptrend just yet, but we're anticipating that if we bounce, we'll just form a lower high, and then that will potentially lose the hourly uptrend to indicate daily consolidation is coming, and we'll look for a higher low to form. When we're looking at consolidation, we're measuring how much of the move have we given back. What does the volume look like? Is it increasing bear volume? Is it declining, which is what the bulls want to see? And those help us gauge our estimation in terms of where are we going to pull back. So let's say CWeb sees declining bear volume for a couple days and healthy consolidation with hourly lower highs and lower lows, but no big flushes whenever we hit that new lower low, just a quick little pullback and then a short-term bounce. If it's contained consolidation like that, we'd be looking for a higher low to form, perhaps in the low 15, upper 14s. If it's increasing bear volume, perhaps we look to pull back to the low 14s. So that's how we gauge. People ask me, what can we anticipate? Where can we anticipate pulling back? And my answer is always, we can't even begin to estimate until we see what consolidation looks like. We have to see where we top out and then what that consolidation looks like from there. So overall, the lower cap names still have a lot of life in them, some of them in terms of strength to the upside. Again, let's just rank them. HEXO, a lead Canadian MJ bull. N is still strong, closing at the high of the day. That shows momentum heading into tomorrow. GTII and KSHB stand out on the US side of things. Even IIPR picked things up today, finally seeing some strong bullish action. It was a laggard on this bounce, not really seeing a lot of follow through. It went red, green, red, green, red, green, red, green, and then finally getting that volume spike and a significant move to the upside. But overall, we're watching, how are these correlations shifting with the S&P 500? And this is a scenario where the MJ sector, as far as, history, been trading this space since 2010. We run in January. I'd probably say in the last 8 years, we've run in January, maybe all 8 years, but if not, certainly more than 6. So this is a seasonality thing. And we had a bit of a extenuating circumstance with the S&P 500 collapsing, but the bounce was timed perfectly for the MJ sector to see its January rally. It's just rallying from a much lower point because of the weakness due to the market fears. But obviously you can see the shift in psychology around the market. It's not this doom and gloom anymore. The market has bounced pretty solid. Oil has bounced pretty solid. And that has been a catalyst for people being able to take the leap to put their money into these high-risk names because the market has reached temporary bottom for the time being. That being said, we have to plan for all scenarios. We hope for the best. We plan for the worst. If the S&P 500 sets a weekly lower high, and I don't believe it's just going to roll over and dump to lower lows. We've bounced too significantly at this point. But let's say we top out and set a weekly lower high soon in the upper 250s, and then let's say we pull back and form a higher low and give us a standard equilibrium. What if the equilibrium breaks bearish and we drop to lower lows in, March of 2019? That's something we have to be aware of, and we have to be watching how is that going to affect all of these individual names as well. And obviously, in my opinion, it would have a bearish effect, but the question is how much of a bearish effect? Likewise, we're watching an inverse head and shoulders pattern on oil, and if that plays out on the weekly time frame, and if SPY sees a higher low and a higher high on the weekly, a lot of these MJ names are going to continue performing. So as always, keep your eye on the backbone of the market, the S&P 500, as well as oil, and we'll continue to monitor individual names. Like I said, it's getting a lot more tricky with so many names out there to determine where's the best place to put our money. Those that look at the fundamentals, put their money in a certain place and stick to it, hopefully having stop losses in place. But short-term traders who are looking to jump to the next hot thing, there are a lot of tickers to keep your eyes on, and that's why having more people keeping their eyes on things is better. So trade with friends. Appreciate you watching. Hope you do some good things out there, and stay warm or cold, whatever you want. I hope your body temperature is exactly what you want it to be.